Hello, Prof. This is my presentation on the analysis for equity investment at Berkshire. Introduction. This report aims at evaluating the equity investment of Berkshire Hathaway. Investment analysis refers to a systematic method of evaluating an investment to assess the gains and risk. This paper analyzes consolidated balance sheet, consolidated statement of earnings, consolidated statement of comprehensive invoice, consolidated statement of change in shareholders' equity, consolidated statement of cash flow. Investment analysis is a crucial tool once creating an investment call because it provides an assessment of the fitting of a given investment plan. The main purpose of this paper is to analyze and give solution to the 8 questions in Maria's to-dos for a better understanding of Berkshire Hathaway financial reporting investment in other companies using the exhibits given. 1. How do monetary amounts of investments in equity security in the balance sheet as at 31st March 2018 was determined? From the consolidated balance statement in Exhibit 1, the value of Berkshire Hathaway investments in equity securities as stated in the assets section under insurance and other is 164,026 million as at 31st of December 2017 and $166,658 million as at 31st March 2018. The values were stated using equity method, see Note 8. Equity method of investment valuation is determined by adding the investment income to the initial cost of investment less dividend. 2. What was the investment in Kraft Heinz Company assets account as at 31st March 2018, different from that listed before it? Considering the second item in Maria's to-dos, there's an increase in investment in the Kraft Heinz Company from 17.6 billion as at 31st of December 2017 to 17.7 billion as at 31st of March 2018. See consolidated balance sheet, consolidated cash flow, and Note 6 in Exhibit 1. The figures of the investment in Kraft Heinz Company was stated at equity method. Berkshire Hathaway holds investment in business that are accounted for the pursuant to the equity method, see Note 6. For the journal entries, the values of investment in Kraft Heinz share as at 31st December 2017 is $17.635. Then add investment income in the first quarter of 2018, balance figure is $0.52. Then the value of investment as at 31st of March 2018 will be $17.68. From Note 6, the total amount of dividend declared by Kraft Heinz could be ascertained as follows. The number of shares owned by Berkshire Hathaway in Kraft Heinz is 26.7%. As an associate is 325,442,152 shares. So the total number of Kraft Heinz shares is 325,442,152 shares over 26.7% times 100%. That gives 121,888,464 shares. Dividend per shares as at 31st December 2017 equals dividend over total number of shares, and that is $195,000 0.00000 divided by 325,544,152 equals to $0.599. Dividend per shares DPS as at 31st of March 2018 equals dividend over total number of shares, and that is 203,00000 divided by 325,544,152, and that is $0.624. Total dividend declared by Krashen's equals DPS times total number of shares. Dividend declared for year end 31st/12/2017 equals 0.59992 times 1288884 equals to 730,111.782. Then dividend declared for the quarter ending 31st of March 2018 is equal to 0.28246 times 1218884,464, which is equal to 760,583,905. Moving forward, number 3, does Berkshire Hathaway have an investment in equity securities other than those listed in insurance and other segments? Berkshire Hathaway had other investments accounted for pursuant to equity methods as stated below in notes 5 and 6, and this includes Berkshire Commercial Mortgage LLC, Pilot Travel Centers, Pilots Flying J, Electric Transmission Texas, ETT. Berkshire investments in these entities were $3.4 billion as at 31st December 2017 and $3.5 as at 31st of March 2018, and were all included in insurance and other assets in the consolidated balance sheet, Exhibit 1. Berkshire Hathaway has invested in equity securities, and all of them were listed in the consolidated balance sheet. Before March 2018, substantially all the equity security investments were classified as available for sale and were additionally carried out as an honest price. Moving forward, question number 4. During the quarter ended 31st March 2018, did Berkshire sell its investment in equity? 4A. During the quarter ended 31st March 2018, Berkshire Hathaway sold some of its equities, see Note 8. Exhibit 3, Panel B, also gives an indication of the total number of shares in Wells Fargo & Co. sold in first quarter of 2018 as 172,000 shares at $50.98 per share. This resulted in an investment loss of $240 million in the period due to fall in the share price from $52.41 to $50.98. Investment loss or gain is the difference between the purchase price and sale price of the investment multiplied by the number of shares. Calculations of the investment loss, we have difference in shares price times number of shares sold, which gives us 52.41 minus 50.98 times 172,000 shares, which translates to about 241 million, i.e. investment loss. Moving forward, 4B, also the the quarter ended 31st March 2018, Berkshire Hathaway purchased additional stock which was included in its investment in equity securities asset. Account to the consolidated balance sheet. See statement of cash flow in Exhibit 1. From the consolidated balance sheet, there's an increase in the value of investment in equity security from 164,026 million as at 31st of December 2017 to 166,658 million as at 31st of March 2018. Exhibit 3, Panel B, also gives an indication of the additional shares purchased in Apple Inc. as 74,400,000 shares at 160.5 shares, leading to an increase of investments in Apple from 166,900,000 shares on 31st of December 2017 to 242,300,000 shares on 31st of March 2018. 4C, from considered statement on change of shareholders, equity investment 1, the investment in equity securities held by Berkshire Hathaway as at 31st March 2018 has appreciated in value from 295,349 million in 31st March 2017 to 351,052 million in 31st March 2018. But during the first quarter 2018, the investment lost value from 351,941 million in 1st of January 2018 to 351,052 million in 31st of March 2018. That is the total sum of $902. 4D, Berkshire Hathaway on investment equity securities is summarized here in Fig 1. On the debit side, as at 1st of January 2018, balance brought forward is 164,029 million. Cash purchase, see consolidated cash flow, is 14,764 million. Adjusting balance figure is 154 million. On the credit side, cash sales, see consolidated cash flow, is 4240 million. Investment loss on 2018 sales, see note 8, is 240 million. Provision under unrealized loss securities held, see note 8, is 787 million. Adjusting balance figure is 154 on the debit side. Moving forward, number 5, the importance of the disclosures which Berkshire Hathaway made in note 18 on fair value measurement. The essence of this disclosure is to indicate the difference in carrying value and the fair value of the investment. In investment, fair value is reference to the asset price as determined by the willing seller and buyer, and often established in marketplace, while the carrying value of, as stated, is based on the company's balance sheet, which takes cost of assets and subtract its depreciation over time. In other words, carrying value reflects equity, while fair value reflects current market price. For Berkshire Hathaway, the fair value of the financial instruments were measured using market approach and income approach as disclosed in note 8. Moving forward to question 6, Berkshire Hathaway Company's earnings performance in first quarter 31st March 2018. Earnings typically refer to after-tax net income. It is its company's profit, which is sometimes known as the bottom line. Earnings shows profitability compared to analyst estimates. The company's performance over the years and relative to its competitors and industry peers. That is, the net loss of $1,138 attributable to Berkshire's shareholders in the first quarter 2018. This is a drop in earnings compared to the same quarter the previous year, with a net earnings of $4,060 for the quarter ended 31st March 2017. See Exhibit 2. This may lead to a drop in share price of the company in the first quarter 2018, as earnings are the major determinant of companies' share prices. Earnings and circumstances relating to it can indicate whether the business will be profitable and successful in the long run. The major contributory factor to this net loss of $6,426 in investments and derivatives during the first quarter of 2018. Moving forward, number 7, the T account showing Berkshire Hathaway total investment in equity securities in the first and second quarter. On the credit side, that is the Berkshire total investment equity securities as at 31st March 2018. On the credit side, the balance of Bank of America Corporation is 20.7. American Express Co. is 15.10 million. Coca-Cola is 18.4 million. Apple Inc. is 28.4 million. Wells Fargo and Co. WFC is 29.3 million. Cash purchase C consolidated cash flow is 14.77. An adjusting balance is 4.22 million. On the other side, the cash sales C consolidated cash flow is 4.2, and investment loss is 0.8, while provision is 7.82. As at 31st of March 2018, balance carried forward Bank of America is $21 million. AXP is 14.10. KO is 17.4. AAPL is 40.7. And the WFC is 25.2. On the second quarter 2018, moving forward, as at 31st of March 2018, balance brought forward by Bank of America is 21 million. American Express Company is 14.10. Coca-Cola is 17.4. Apple Inc. is 40.7. Wells Fargo and Co. is 25.20. And investment income balance is adjusted at 5.25. As at 30th of June 2020, balance brought forward by Bank of America is 19.73. AXP is 14.85. KO is 17.54. AAPL is 44.85. And WFC is 26.6. Moving forward, question 8. Effect of new financial reports rules for investment on Berkshire Way financial statement. The General Accepted Accounting Principles (GAAP) requires companies to provide on their cash flow, profit-making operations, and overall financial conditions. The major financial statements required under GAAP are income statement, statement of cash flow, and statements of retained earnings of equity statement. These statements are already maintained by Berkshire Hathaway. On the primary objective of GAAP, is to provide investors with information about firms' future cash flow to facilitate their investment decisions. The rules changes does not concern the measurement and reporting investment. As stated in Note 2, Berkshire Hathaway on 1st of January 2018 adopted accounting standard update of ASU and has, with respect to ASU 2016-01, reclassified net after-tax unrealized gains on equity securities as at 1st of January 2018 from accumulated other comprehensive income to retained earnings. Financial reporting standards and necessities vary from country to country and naturally creates inconsistencies. Berkshire Hathaway and most corporations will be obliged to disclose qualitative and quantitative information concerning its accounts with customers, together with mutuality analysis for contracts extending on the far side of a year. Because of this inclusion, any important judgments and changes in judgment created in applying this planned commonplace to these contracts. These changes will also positively affect the company management. The change to boost via lower interest rates, thereby lowering risk and the cost of doing business. On the other side, investors will have to re-educate themselves in reducing and understanding accounting reports and money statements following the new internationally accepted standard, which could face a small amount of resistance. The shift and convergence of the present commonplace to internationally accepted ones will force accounting professionals at Berkshire Hathaway to find out the new standard and can result in consistency in accounting practice. The chief financial officer at Berkshire Hathaway might not embrace this modification as they have had slow progress in transition in the past due to price, which may be concerned. There are specifically two areas which will directly impact Berkshire Hathaway money coverage and its control system. Another is public perception and integrity of the new set of standards. Berkshire Hathaway might respond to the change in GAAP that adversely affect its financial statements by cutting investment in risk assessment and the purpose of preserving net worth and preventing deterioration of financial ratios. Thank you very much.